Today I will share with you the Pinbar secrets. What is the meaning of the Pinbar, the story of the Pinbar, and also I'll give you a free indicator to find the Pinbar on TradingView. Also, we will discuss how to find high probability trade using the Pinbar and how to combine the inside bar, outside bar with the Pinbar and the failure of the Pinbar. Hi, my name is Khaled Maziad and I am the founder of Trading Roadmap. As you read this disclaimer, if that's your first time here and you would like to learn more about how to develop your winning trading plan, become consistent, control your emotion, and totally change your life, please start now by subscribing and hit the bell notification so you will not miss anything. If you are one of our subscribers, so welcome back and welcome to the fourth module of our free trading course, the Trade Journey. And today we will discuss the Pinbar. So today we will go through the Pinbar story and the definition of the Pinbar, the free Pinbar indicator on TradingView, the Pinbar meaning, and the V pattern, the 3 pro tips of the Pinbar, the failure of the Pinbar, and then we're gonna have a recap and then we will finish with the assignment. So let's start with the Pinbar story. I believe as kids we all remember the Pinocchio story, and Pinocchio is known for having a short nose that becomes longer when he is under stress, especially when he lies. And in his book Technical Analysis Explained, Martin Pring coined the term as a Pinocchio bar, and which becomes later the Pinbar. And the reason for that because it lies about the direction of the market and it exposes lies by having the wick or the shadow. So it's gonna become more clear when we discuss the definition of the Pinbar. So the Pinbar that we're gonna consider is when the shadow of the wick is 2 times the body at least, so it's 2 times or more the body, and it should be open and close on the top 33% of the range, especially in the bullish, and in the bottom 33% of the range for the bearish. And the Pinbar applies to all time frames, so it applies for daily time frame, weekly time frame, monthly time frame, and we're gonna go through some examples now. So let me first share with you like how to find the free indicator that I created for the Pinbar that meets this criteria we have defined now on TradingView. So you have to go, you'll find this, it's called Pinbar Trading Roadmap, and then you will go to indicators and strategies, and you will click, and then you need to write Trading Roadmap, and then you will find the Pinbar under the public library, and that's the indicator you're gonna use. So the Pinbar Trading Roadmap. So what does the Pinbar mean? It's very important to understand the meaning of the Pinbar. So we defined it. Let's understand what's the meaning of it. And let's agree on one thing. The shadow or the wig represents traders caught on the wrong side of the trade. So those traders has been caught on the wrong side. But it basically means 2 things plus the people has been trading the wrong side. It means either it's a trend exhaustion or it's a profit taking. I know like most of the people mention it is just trend exhaustion and we're gonna reverse from there, but I'm gonna show you some examples that sometimes it's just a profit taking and then the market gonna continue on the same direction. And as you see here, like this one is a trend exhaustion, so the trend has been exhausted here, and for the second one that was a continuation pattern, and then we went up from here. If you find this one, yes, it went down for 1 bar, but then we have the continuation pattern, and then we have this sort of range for a couple of those pin bars there. So basically it means it's wrong way and we're gonna go for the other direction. But how far we're gonna go in this direction, that's another story that we will cover right now. So also it worth mention like the V pattern and the pin bar, and because many people talk about the V pattern, but if you understand what is the V pattern is a pin bar in a higher time frame. So that's, I'll give you an example on the Aussie dollar, in that's a 1 hour time frame, and that's a V pattern. And then if we go for the daily, you'll find a pin bar, and that applies for all time frames. So let's have same for the Aussie dollar, and that's kinds of P pattern on the month, 1 month on the monthly chart, and then you go for the 4 month, you're gonna find a pin bar. Same applies for US dollar, Japanese yen, V pattern on the monthly chart, and then you're gonna find sort of pin bar on the quarterly chart. So if someone tells you anything about the V pattern, it's basically a pin bar on a higher time frame. So let's now go through the 3 pro tips of the pin bar and how to find a high probability trade using the pin bar. But first thing, you need to remember 2 things: that the pin bar or the wick or the shadow represents either one of 2 things. We don't know exactly what it is. Sometimes it's gonna represent a trend exhaustion, and sometimes it's gonna represent a profit taking. So the first pro tip is it is either a continuation pattern or reversal pattern. The pin bar is not just a reversal pattern. Sometimes it's a continuation pattern. And I'll show you this now. And as we mentioned before, E here we're gonna be for exhaustion, and PT gonna be for profit taking. So let's start from the left side, and we're gonna have this pin bar here, and here it represents exhaustion of the previous trend, and then we went up, then we got this one. It's not a reversal, that was just a profit taking, and then we continued up, and then we have this sort of exhaustion, and we went like for 1 week, 1 2 3, because that's a daily chart. You have a couple of five bars. We went down, and then we continued, and then here is sort of exhaustion, both of them, and then for that one just a profit taking. And then we're gonna talk about this pattern like the fight between 2 pin bars. One shows profit taking and the other one shows exhaustion, and for this one it shows exhaustion of even it's a small trend, or it's not a major trend reversal. So thinking about this, you will find like 2 notes here that worth mentioning. The first one is trigger is the high or low, not the close. You're gonna avoid many losing trades understanding this. So like this one, you would have, if you're a trader and you just decided to go on the close, this is gonna be a losing trade for you. However, if you waited for the trigger for the low of the pin bar, which had never triggered, so you would have never had this trade, so it would be nothing. So you didn't have any trade. And you're gonna find this concept to apply a lot, so you have to understand this. Second thing, the failure is a pattern, and have you seen the same bar when it failed, and we will discuss the failure later, but when the pattern fails, it might be another opportunity to add to your position, and we will discuss how to combine this later with the inside bar and the outside bar. And the second tip is the market structure and multi-time frame analysis. And I know that I have mentioned this in every single module since we started. I mentioned the same one in the inside bar, I mentioned the same tip in the outside bar, I mentioned here in the pin bar. It's very important, the first step, and that's why our first module was the market structure. It's very important to define the market structure and understand the market context before trading anything. That's the first step we need to do. And I'll show you exactly what I mean by that. And recently, that's the current of chart of palladium, and the palladium was in massive uptrend for the last couple of months, like since I believe since November we have been, or since December we have been on an uptrend. And then we got here a pin bar on the weekly chart, and if you look for if you look for the daily chart, and what do you see here? There is a pattern here we spoke about it, we talked about it in the inside bar, and you remember when we said the inside bar is not just a bar contained within the previous bar. Sometimes if you understand this as data, that's an inside bar of those two bars. And by the way, Linda Rushke has a name for this pattern. It's called I believe it's called the three bar triangle, which is it consists of a bar which is the high of this bar is lower than the previous two bars high, and the low of this bar is higher than the two bars low. So that was a perfect entry here. I didn't take this trade. I just exited my position there, but it was an opportunity to go there, especially if you're gonna combine on lower time frames. But that's another story. We are not talking about trades now. We are talking just about understanding and how to combine multiple time frame analysis with what you see on the chart. And the third tip is it's very powerful to understand the combination of the pin bar, inside bar, and outside bar. And I'll show you many examples now. And if you understand what we have discussed in module 2, the inside bar, and module 3, the outside bar, you're gonna find I showed you some of those examples, but I didn't tell you it's what does exactly it means. Now you're gonna understand exactly what we have discussed. So this one is from module 2, and what you have here, you have an inside bar failure with a pin bar, and then for that one you have a pin bar, although it's on a downtrend and after like a range, and you got another pin bar and those another pin bar, and all of those was an entry point. And if you think about this, I have just discussed this one now, that was an inside and then a rejection, and then the rejection of the rejection, you got a pin bar. And that one from module 2 also, you remember that's the domino breakout, and we have this, that's a pin bar on the weekly chart, and then you can having this information going to the daily chart, and you're gonna find here on the daily chart we have an inside day, and also if you remember we have this one triggered also an inside month on the higher time frame. Also if you see this, that's from module 3 from the outside bar. You got here that was an outside bar, this bar was an outside bar, and then you got rejection of the outside bar triggered. And remember when we spoke about the outside bar, we said the objective is to take the other side, which happened here. Also you're gonna find it here, you have a pin bar got triggered, and then we went for a range, and then it went up. So also even from today's module, you're gonna find the pin bar with the inside bar pattern and trigger a massive sell off. That's something you need to take in consideration. So it's very important to understand like the inside bar, the outside bar, and the pin bar. I don't think it's a strategy in itself. The strategy in itself, you need to take in consideration the market structure, and then you're gonna have the setup like when you're gonna have a powerful combination like the inside bar failure of the outside bar failure of a continuation pattern of a strong trend. That's how you will be able to find a high probability trade using the pin bar, inside bar, and outside bar. And now let's talk about the pin bar failure. And the outside bar failure happens when you have no trigger at all, so nothing happened, or a failure of combination, like we have a failure of combination of inside outside pattern failure, or the pin bar fight. And I'll show you that what does that mean now. So let's go now, and that's a palladium, and look what happened here. You have this pin bar, and this one has never triggered because the next candle was just an inside, never triggered. So you avoided here. It's a failure, But if you think about it, we were still in range here, because that's, don't forget, that's a weekly chart. So we were still in range here, and then if you combine it with a higher with a lower time frame, you can find some many entries to trigger this inside week. The other thing here, you have the same one, and that's the failure, that's the combination. Remember when I said the failure of combination, and that's an outside bar, and then we got the pin bar. And then remember when I said the objective is to take the other side and coming outside of the range. Now we got an inside bar, and then the trend continued. So that's the failure of the pin bar. Also, that was the failure of the combination of the outside with the pin bar. Also, if you think about this bar, which I have just discussed, this bar is an inside of those two bars. Plus, it contains another inside bar, which is, remember when we said about expansion, contraction, and then you have another contraction. It's very powerful pattern also. And also, you're gonna have here the pin bars fight. That happens when you have a pin bar and then fight another pin bar. It's very powerful, especially when you have a failure of an inside bar, because let's go back and understand where we are right now. So we have an outside bar here, which was basically in some sort of range, and then what happened here, we got the failure of the outside bar and we came back to the range. We didn't take the other side of the outside bar, and we went inside, and then we got the failure. So we were expecting now to get out of the outside bar, which happened on the next candle, and then we got the pin bar fighting this pin bar. And then what happened, we took the low of the pin bar and the low even of the outside bar. Yes, it got exhausted after like 3 bars, but I believe, as we mentioned before, especially when you talk about the daily, this bar just showing you what happened on the daily chart. So you expect this to just trigger for 1 day. That's the expiry of the bar. After that, you need another information and you need more data to keep going, to keep the pattern to continue. So I believe that's it for today. So let's have a quick recap. Today we discussed the pin bar story and the Pinocchio story, and it was very funny. And also we discussed the definition of the pin bar. We discussed also, and I showed you the free indicator of TradingView for the pin bar. It's very easy to find and it's also free. And the pin bar meaning, and we mentioned it's not only a trend exhaustion, sometimes it's a profit taking. And we discussed also the V pattern, and we described it. The V pattern is just simply it's a pin bar on a higher time frame. And then I showed you the 3 pro tips of the pin bar, which is combining the inside outside with the pin bar, and understanding the market context and the higher time frame, and understanding also that the pin bar is not only just a reversal, sometimes it's a continuation pattern. And we discussed also the failure of the pin bar. We are having the recap, and then we're gonna have the assignment right now. So the assignment of this week will be, I want you to choose 5 different markets and time frames and try to find 5 different types of the pin bar, and also try to find 5 different types of the pin bar combination. Also try to find the V pattern on a lower time frame and go for a higher time frame and find the pin bar. And also try to find 5 types of the pin bar failure. And I want you to comment below now and tell me what you prefer to trade. After seeing this, do you prefer to trade the pin bar or the pin bar combination or the failure of the pin bar? Again, you can connect with me on my personal page 𝐏𝐢𝐧 Maziad on Facebook, or our Facebook page on Trading Roadmap, and our Twitter handle is Trading Roadmap. And if you'd like to send me an email, you can send me an email at Khaled@tradingroadmap.com. Thank you for watching, and I'll see you in the next video.